So I will read a little bit about you, and then we'll talk about it some more. How, by the way, is the COVID situation in your area?
COVID?
Yeah.
Things are pretty still locked down in Minnesota. So they're starting to slowly loosen some of the restrictions. I think April 15th is the next date that some of the rollbacks happen, including no more mandatory work from home. And some of the restaurants and bars and such will be more open, but we're still pretty closed down. So we're obviously looking forward to that and returning a little bit more life as normal.
But vaccination wise, I assume it's like in other places and it's on track.
Yeah, it's coming along for sure. There's certainly progress. Both my parents got inoculated about 6 weeks ago, and that's great progress. So they've been able to travel and live normally. And next week, going on spring break with them, with my daughter, my 3-year-old, and my 8-week-old. So we're excited about that and glad they can come with us. Fortunate.
Yeah, so great. So so a little bit about you. So you're a 25-year veteran of the IT and information security industry. Dave has been immersed in the cryptocurrency mining industry and blockchain technology since its formative days. He founded and later sold 2 technology companies, including an internet service provider, managed security provider, Secure Connect, which was acquired by Trustwave Holdings in 2012. He also served as CEO of WEN Corporation, a leading point of sale and digital menu board provider to the quick service restaurant industry. Mr. Perrill has extensive experience in networking, data center engineering, scaling large IT systems, and security. Networking also, by the way, I believe socially also. He holds, right? Yeah, so you studied at the University of Minnesota, where you got your MBA in finance and management information systems. You've been a member of YPO since 2015 as part of the Twin Cities, Minneapolis and Minnesota chapter. And we are very fortunate to have you here with us. And you know, you've done quite a lot in your career. I mean, you must be proud of yourself, and it's going to be interesting to see. I mean, you came from you know, maybe that question I'll ask you before we'll start with these. I mean, there's a lot going on in cryptocurrency, in blockchain. I don't need to tell you guys about that. That's why we're doing almost every month. We have an event about what's going on in that world. But what brought you from the more, you know, stable world of technology to the more, you know, the world of blockchain and cryptocurrencies and everything around that? I mean, it's a completely different universe, tech-oriented, obviously, but different style, different world. You didn't continue after selling your companies in the same route. You went to, you discovered probably this world. What brought you there?
Discovered, right? So the greatest misnomer ever, the stable world of technology, right? So where everything's changing all the time. Yeah, to your point, so now a 3-time founder, so a bit of a glutton for punishment, I guess. But I got really interested in what was going on in the cryptocurrency space prior to the run-up in 2017. And as I kind of took a closer look at it, I got really intrigued by the concept of mining. And that's really one of the underlying principles of the decentralized nature of Bitcoin, of blockchain. The miners are really what make it possible and what make it that no single group controls it. And as I kind of pulled back the window dressing a little bit, I found a really nascent market. It was really new. I felt it was really underserved. And like a lot of nascent markets that I had experienced, particularly the dot-com space in the late 90s or mid 90s, it just wasn't professionalized yet. There wasn't people with scale. There wasn't necessarily credibility. There wasn't, you know, what I consider just a professional management team. And as you know, I was looking to place my own miners and find someone that could help us and do the hosting. I just couldn't find the credible source to do it. So we stepped in, got involved with it. I joined my co-founder, PJ Lee, who has extensive energy background, and we started up operations in a small town in West Texas back in early 2018. We were operational within about 45 days. And through that, what we found out very quickly that there was a real market, a real need. And, fast forward here 4 years, we now have, 3 sites under management. We're working on our 4th location. And we think, the whole computing paradigm is going to continue to shift and change along with the energy markets. So very exciting and kind of the big macro trends that we play a part of today.
Right. I'm asking that question, the many entrepreneurs, or not many, but several entrepreneurs that made it big time in technology, in cybersecurity, in other areas, ended up here. Barry Silbert is one name, and many others. So it's very interesting to hear, how that evolved. And maybe you can talk a little bit, about what is cryptocurrency mining, how does it work, and that. And by the way, I'll tell you that one of the criticism we hear about the blockchain, the cryptocurrency world, is that it pollutes the planet. And what I spoke to the head of commodities at Bloomberg, and he said, we used to ride horses. That doesn't pollute. Do you want to go back and ride horses? That's where we headed, and that's something that is legit, and we're getting to do it more efficiently. But maybe we can start with what is crypto mining and how it works.
Yeah, I'll address those separately. First of all, we know Barry and his team over at Digital Currency Group well. So they've obviously done very well in this space, just a real visionary, being in front of some emerging trends. But they've been a partner to Compute North. We work with their financing group and some of their hardware team at Foundry. And just great people to work with. But to your other question of, what is cryptocurrency? What is the decentralized nature of this space? And I think maybe I'll focus on Bitcoin because that's kind of the 9,000-pound gorilla. It's really what everyone is talking about right now. There's certainly other options, other networks out there, but the biggest thing about what Bitcoin is and isn't is it's decentralized. It's not controlled by anyone. And I think the biggest thing that was solved was the ability to have a digital asset that can't be copied and can't be double spent. And we can talk a lot about the technical details and the components that make that work. But I think the easiest analogy to think about is think of mining and think of the Bitcoin space as the Visa of the credit card network. These miners, which is who we serve, provide computing power, and they provide the IT infrastructure into the Bitcoin network to allow it to process and allow it to run. And that's what allows you to send a Bitcoin to somebody else, buy goods and services on it, and run that entire network. As a result of that, they get an economic interest. So they are incentivized to do this by receiving in payment in the form of Bitcoins over time. And every 10 minutes, the new miner is rewarded, someone at a random scale, but on a long-term trajectory is directly related to the amount of computational power you put into the network. And that's what makes the system work. That's why there's no single figure that can change it, nobody that can inflate it or deflate it. And obviously in the economic condition that we're in today, that's a very important point. And I think it also helps understand the mindset of what this came out of. Bitcoin was really born out of the 2008 financial crisis. And so it was really intended to be something where there was no single entity that could oversee it. It was also intended to be somewhat uncensorable by governments and being able to run on a peer-to-peer nature. And I think that's really the way that it survived and continues to thrive today.
And how does it really work? What are the risks of mining? What are some things to consider before a family office enters the crypto space? If you can talk a little bit about that.
Yeah, and I should also hit your component on just the the carbon footprint in the way that we see that too. So I'm happy to come back to that question, but maybe I can just jump on that now while I'm thinking of it. We think that the decentralized nature of what's going on in crypto and blockchain is going to continue to get more and more green. The estimates today, which are admittedly hard to come by, are between 30 to 70% of the energy use of Bitcoin is renewable. We think on a long-term basis, we think things like Bitcoin and other decentralized computing applications are going to actually cause more renewables to be built. And I think what happened in Texas, 6 weeks ago is an interesting case study to look at some of the challenges of what happens with renewables. And I don't think renewables are singly to blame. I think there's a lot of components that went into what happened in the Texas ERCOT grid. But we do see that, the power generation and the need for Bitcoin is going to continue to grow. And we see that the carbon footprint can't continue to do that. Renewables are the cheapest, they're the most cost effective, and a lot of times where renewables are generated isn't necessarily where population centers are at. A lot of the windiest areas, a lot of the hydro dams, even a lot of the sunniest places are obviously in the middle of the desert. It's really hard to bring the population centers to that. What is not hard to do is bring the compute to that. And I think Compute North is really at the forefront of thinking in that manner of a power development first type approach. And I think we'll continue to see that in the years ahead. So to your point about what's our risks that we see in the blockchain, in the crypto space, I think the number one thing is it's going to be really interesting to see how governments react. Obviously, we're seeing what's happened in overseas. China's had a bit of a crackdown on the miners, and then they've kind of gone back and forth. We've seen other, geographies. India has also had similar, crypto bans, but then they've kind of backed off and haven't gone full force. As I alluded to earlier, kind of the overall architecture of this is somewhat government independent, but I think that always remains a risk to kind of see the reaction that they're going to have. Along with that, crypto's volatile. People always ask me, should I invest in crypto? I'm like, we invest in the ecosystem. We invest in the infrastructure. We think, that is really an interesting long-term play. As far as what's the price of the coin and where that's going to go, there's a lot smarter people like Barry and his team over at Genesis or at Grayscale, pardon me, and DCG that are thinking about this all the time of, where do the prices go and how do they go about that. I think they're better suited to answer the types of questions on what I consider more the speculation of the actual value.
So I'll soon ask you more questions about the industry, about mining, about all of that. But maybe before that, I want to learn more about you guys. So you actually have areas where you actually have loads of computers and they are mining. How does it work? What do you guys do, and what is really your offering at the end of the day? So a little bit more to know, to understand about Compute North. I understand you have several locations. Your role in the mining process. So maybe we'll start with that.
Yeah, no, appreciate the question. So, Compute North is really a service provider to the mining industry, and at a greater scale, what we're calling a new category of computing, which we call tier 0 computing. For those of you familiar with the data center space, data centers are separated on a level of tier 1 to tier 4. The higher you go up in the tiers, the more redundancy, the more reliability, and frankly, the more cost. We see a world where we can take the compute and the actual computing needs to the source of the energy and take out all the unnecessary expense and costs that we think are present in tier 4 data centers for the right type of applications and do it much more cost effectively into the magnitude of 15x. And we think, crypto and blockchain is just one of many types of computing applications that we think belong in a tier 0 computing center. Other things that we see coming down the road are like large scale machine learning, neural networks, kind of the things that are on the forefront of artificial intelligence and the things that are going to really enable those types of things. Like if you look at what Tesla is doing, the amount of data and the amount of information they create every day with the amount of vehicles, and they need to train their algorithms to become better drivers. The way they do that is through large scale machine learning and neural networks. And right now it's very, very expensive for them to do that on the public cloud, for them to do it in Google or Azure, so they're building their own. Not everyone has the economics or the balance sheet of Tesla. And that's where a company like us can step in and do it cost effectively. Other things, video rendering for large scale animations, oil and gas, climate modeling, anything that's computationally intensive but non-mission critical, we think belongs in tier 0. So I think, to your question of how do we fit in the mining space, for those of you familiar in data centers, we provide co-location. So we do all the power development, we buy the land, we put in the equipment, the electrical, the networks, we have the staff and the personnel to actually manage the devices. But then the customers actually bring the gear, or we help source them for it. And then we make sure they run. We make sure they run well, we make sure they run cost effectively, and we can obviously help them achieve very high scale. Most of our customers are in this for the financial side. They're looking to get a return on their investment. They don't necessarily want to be operators, but they have an interest and a want to have, the mining component of this or the mining angle. And I can talk a little bit later on why we think that is an interesting way to get involved in crypto. And that's where we play the part. We help do the work on the ground, if you will, and make sure their operations are online and generating revenue.
And how is it cost efficient versus other mining plants? You said you bring into the energy source. What energy source, and how is it more efficient and cost effective?
Yeah, great point. So, Compute North, we separate ourselves in three ways. First is being very credible. If you look at our management team, you look at our backgrounds, we have extensive other startup companies. We have other businesses that we've run and founded and sold. We got extensive experience in energy, technology, finance, which I think are really kind of the intersections that we play. As we also, drive to low cost in everything that we do, and I'll tell you a little bit more about how we get there. And then third, last but not least, we move very quickly. In a market where time is money, we need to develop fast, we need to take care of our customers very quickly, and we're built to really move at that type of speed. On the economics front, the way we get there is through a couple ways. One is by being a strategic provider and a strategic asset to the energy grid. And what I mean by that is a lot of companies are out there being a parasitic load. And by parasitic, I mean you hook up, you run 24/7, you take as much energy as possible, and you don't care what else is going on. We like to be much more strategic in the way that we both source and we identify the energy assets, where we want to use existing infrastructure. So if there was a former steel plant, if there was a substation already in place, if there was already infrastructure, let's use that. There's no reason for us to recreate that and build the CapEx and build the costs. There's an asset already there, we want to leverage it. The second piece is the way that we interface with the grid and the energy providers, in that we should be curtailed. And curtailability means we can shut down. We don't need to be online 24/7 by 365. And what happened in Texas 6 weeks ago is a perfect example of that. Our Texas location was one of the first sites to shut down, because our compute isn't mission critical. Our customers are fine with having some sort of downtime, knowing that they get much reduced fees as a result of that. So when it comes to health and human services, other mission critical applications, we should be the first one to curtail, and we should come offline. And if you think about that, Denny, it's kind of like a reverse battery, right? Instead of us taking that load and using that load, we are shutting down, and then that load can go to somewhere else. And I think it's through those types of relationships and getting very strategic, even doing things like behind the meter, where instead of us being on the grid and using the grid resources, being actually the actual generation itself, we can eliminate transmission, distribution, grid costs, even reduce some taxes. And it's a win-win partnership for everyone, our customers, the energy providers, and ourselves.
And then how can you help those that listen to us here interested in considering an investment in this space? How would that work?
Yeah, I mean, there's a lot of different ways to get involved with, cryptocurrencies, right? A lot of different ways to get involved in the blockchain. The easiest way, I think, and probably most simple, is simply buying something like Grayscale. You go out there, buy the trust, buy the asset, you simply have the underlying. You can also go out to Coinbase, Kraken, Binance, some of these exchanges, actually go buy the tokens, buy the coins. There's some of our customers, our mining stocks, companies like Marathon, Hut 8, Riot, Hive, etc., can be just purchased off the exchanges, and you can have that type of investment. Most of our customers are ones that actually want to own the actual equipment and gear itself, and then participate in the rewards long term. And we certainly cater to that. That is something that we can do, and we have sales teams and folks that can walk them through the procurement to the service side, and then operate and deliver that for them.
So you actually buy the actual machines that you guys operate on for us. And then,
yeah, correct. We have customers that come to us and say, hey, we have 87 megawatts of gear. It's landing between the next 18 months. We want to be able to service and deliver that. We work with them. We also work with customers that say, I just want exposure. I want to put $2 million of work. How do we go about that? And that's something we can either put to work directly with us, or otherwise, like our last presentation, we also have clients and partners that work with us that have fund vehicles and the like, for those that want to get in a typical GPLP type structure.
Which brings me back to, as I asked you before, the risks of mining. Why mining is an investment to begin with? When you say, if I want exposure, why won't I just, like you say, go to a fund? What kind of values do you get in mining that you don't get elsewhere?
Yeah, great question. So our position is that, Bitcoin, blockchain, cryptocurrencies is going to be more of a platform and a layer which a lot of other technologies are built upon. I think Bitcoin has the first mover advantage. It's the 9,000 pound gorilla. I think it's going to be a standard for a long time to come. For somebody who's been in the technology space 25 years, one thing I do know is that standards stick around. Once they're in place, I still know people that do payroll on AS400s that were put in the 90s. And the reason they do it, it's a standard, it's there, it's in place. Bitcoin's got that same type of standardization going for it, and it's going to continue to grow. So we like the idea of participating on the standardization of that and on the infrastructure of it. Why I think mining is really unique is that there's downside protection. That in a scenario when there's price correction and the prices don't move at the direction that you necessarily want or up and to the right, that it will self-correct over time. And what I mean is that the higher cost miners won't earn enough money to continue to operate their rigs and continue to operate on the network. And at a certain point in time, they'll need to shut down. And what happens, if you think about it as being a pie that everybody shares, the pie stays the same size, but if people start coming offline, by default, your piece of the pie gets greater, your share of rewards gets greater, and your revenues go up. And it will self-correct to the point of equilibrium. And we think that, as long as you can really maintain that discipline of being low cost, makes a lot of sense. And we see a little bit of frothiness in the market right now in regards to people taking long-term power contracts, high energy costs, just getting in kind of at any number. And I get that standpoint right now because it is so profitable to be a miner. However, we stay very, very disciplined to that long-term trajectory of the low-cost position wins on a long-term plan. And that's always been really the mantra of Compute North. And we continue to maintain that discipline through whatever the market might be.
And we have some questions here, but we'll get to it in a second from our attendees here. What are some of the different ways to acquire Bitcoin, and why mine Bitcoin versus just buying it? I mean, you've explained that a little bit now, but maybe you can talk a little bit about the different ways to acquire it and how does that work?
Yeah, I think there's really two key ways to acquire it. You can either buy it or you can mine it. And the buying it, obviously there's different ways to go and exposure with that. As I alluded to earlier, there's Coinbase, there's Kraken, there's Binance, there's a number of reputable exchanges out there. You can sign up for an account. You can simply purchase it at the market price. On the mining side, either being a direct miner, owning shares, or being part of a fund, I think are kind of the three ways you can go about it. I think the biggest reason that you mine it versus buy it, one is obviously economics, is you can mine it much more cheaper than you can buy it on the open market today. The cost of production, I have to check the latest numbers, but maybe $6,500, $7,000. Now there's CapEx involved. There's, it's a longer term trajectory to get to the actual coin, but it's a lot cheaper than last I looked, Bitcoin is at about 55K today. The other piece, which is also getting kind of interesting in the way that the market is going, is some of the KYC AML requirements of virgin Bitcoin. And we're seeing some of the pool operators. The pool operators are the ones that kind of bring everyone together and help operate some of the mining at scale. And they're the ones that actually produce it and give the rewards out, pro rata to their customer base. And there are concerns with Bitcoin that have been used for terrorist organizations or for drug sales or criminal activity or those kind of things. And there is somewhat of a premium to be placed on virgin Bitcoin if the whole idea is just to hold it. And with some of the large corporations like Tesla, like MicroStrategy, starting to put Bitcoin on their balance sheet, we think there's going to be more and more demand for that type of coin in the future.
And how long, obviously, you have to put an investment to start this thing, invest in the machines. How long do you think it's until they become profitable and start to see, great returns? I mean, what's the holding period you would suggest to anybody getting into the mining industry?
Yeah, great question. So the issue, Denny, right now is that equipment is at a premium. So equipment prices are very high due to the price of Bitcoin also being very high in the profitability. We normally look for under a 6-month payback. It's starting to push out a little bit just because the equipment sales are so high. So that's when you take out all your costs of operations. and make that work. There's also, we do see this sector getting to, industrial scale. Some of the, people are able to use, including ourselves, scale economics to drive down costs. And I think retail miners at small levels are going to have a hard time on a long-term trajectory unless they're able to really grow along with this market.
And by the way, it's the same manufacturers we know from the private world that deal with this, like Dell or HP?
No, they're pretty specialized right now. Bitcoin, it's kind of advanced in the way that the chips have advanced. They're what are called ASICs, so application-specific integrated circuit. So it's a chip that does one thing, and it just does the Bitcoin algorithm, but it does it extremely, extremely well and extremely, extremely efficiently. And you need to be very efficient to be competitive because the amount of processing you put into this is directly correlated with your rewards. Some of the biggest manufacturers in the space, Bitmain is out there, one of the 9,000-pound gorilla, company called Canaan, and then there's MicroBT, and then there's about 3 or 4 other smaller providers. Beyond those, I would consider the big 3 in the market. But again, all are commanding pretty hefty premiums, and some of the deliveries are even out towards 2022 at this point because of the demand for the equipment based on the run up of the price.
It's an interesting question why the major players didn't go after this market as well. Why didn't the HP and Perrill of the world didn't go to themselves?
Yeah, I think they will eventually. If you've followed what's going on in the fab market with TSMC and Samsung, there's a big constriction at the fabs, and it's because of everything else going on in the world. Autonomous vehicles, smartphones, just chips and everything. And the Bitcoin market compared to that is small. And it just hasn't gotten the attention of the Intels, the AMDs, some of the bigger players in this space to date. It's going to be interesting to see what happens over the next 2 to 3 years. If this becomes less of a niche market and goes more mainstream, I think it would be good for our market because we certainly don't like the equipment constraints. And for those of you, who haven't placed a $5 million order for something you're going to get in 9, 12 months, and you got to fully fund it a lot of times, it's a little unique. There's just some more customer-friendly terms that we hope will come to bear in the market as it matures.
What role does mining play in supporting the blockchain in your eyes?
So blockchain and mining aren't necessarily synonymous. So mining happens to support the blockchain or the database, the blockchain database for Bitcoin, because that's the way that it achieves consensus. Consensus meaning how do we all agree on who spent what and how does that work? And there's a lot of math and a lot of technology that goes into that, but it's really the thing that makes it secure. It's a thing that keeps it scaling, and frankly is a thing that's kept it operational for the last 12 years. And that's why mining has really been a crucial piece. Other blockchains and other cryptos and other decentralized networks all use different algorithms to actually achieve consensus. So it's not all what's considered proof of work. That's a really energy intensive one that Bitcoin uses. Ethereum is the number 2, and they are on proof of work right now, but with a plan to move to proof of stake. And we could talk for hours on this, but proof of stake is more where you use your monetary or your actual value in the currency and you put it at risk, which is the staking to get additional rewards. Think of it as interest, and that's a way that you achieve consensus and validation over time. So there's over 29 different types of consensus algorithms now that are either in use or are being worked on. So it's going to be really interesting to see what kind of emerges as some of the leaders over the course of the next couple of years. We're still early innings. This is 1994.
And I see more questions coming, but we'll get to it in a second. Just a couple more questions I have. What's the most popular blockchain and some of the other major blockchains, cryptocurrencies, distributed networks?
Yeah, some of the other big ones, I mentioned Ethereum. That one's a really interesting to look at. And I'd say there's other coins, and then there's actual other, distributed networks. Where I think is really interesting is what's going on with the large scale computing, things like smart contracts, et cetera, that could manage things like futures, can manage, oil futures, et cetera, automatically. And what's really interesting, it eliminates escrow, it eliminates that trusted third party, and the actual compute environment is what handles these kind of things. And I think that's going to get really interesting. And Ethereum's certainly at the forefront of that. They might suffer a little bit from a second mover advantage, or pardon me, there's other networks that I think will have a second mover advantage over them because they're moving pretty slow and they're somewhat centrally controlled. One of them, a couple that I'm looking at really closely is Charles Hokanson and what he's doing with Cardano, known as ADA is the token, but really interesting guy, one of the forefront, leaders in this space. But again, a whole topic for another day. That's very intriguing. Dfinity is another decentralized network called the World Computer. It's kind of how they're branding themselves. That's going to be fascinating to watch. And then there's a lot of, EOS and Block One. I think they raised the largest ICO in history. It was over, I think, $4.5 billion. I have to go back to my notes to double check it, but in an ICO, which was incredible. And they have a lot of resources. I'm hopeful that they come out with some really great technology. And on the other coin side, there's some interesting things with Zcash, Nero, and some other privacy-based coins that I think, give some of the things that Bitcoin doesn't have. The biggest problem with Bitcoin to a lot of people is that it's fully traceable. People talk about anonymity with Bitcoin. That's simply not true. What's anonymous is your address and your wallet. But once that is found out, once that is provided either to an exchange or someone else, every single transaction in and out of that wallet from the beginning of time until forever is publicly viewable and publicly traceable. And that can be both a pro and a con, depending on, is it a store of value or is it truly a currency? And I think we're going to continue to see new technologies continue to push forward in regards to things like Lightning Network and such that run on Bitcoin directly and kind of use that as the underlying layer. And then I think we'll see some other technologies come out on the side, like what is going on in some of those other payment networks I mentioned earlier.
And some of the common misconceptions, perhaps, about cryptocurrency mining. I mentioned some of those early on. Maybe you can talk about that.
I'm sorry, Dan, can you repeat the question?
A little bit, if you can talk about the common misconceptions of cryptocurrency mining.
Oh boy, there's a lot. Obviously, it's a fast-moving, very unique world. I think probably the biggest thing, and this is really starting to change with the broad-based adoption of Wall Street and the big names coming in over even the last 6 months, it's just been incredible. But when I got into the space in 2017, a lot of times if you said Bitcoin, people were like, "Are you a criminal or are you a drug dealer?" That was kind of like step one. So I always hear the push, well, it should be banned because it's used for drugs, and then kind of the retort to that is, well, should you also ban cash, right? Which has the same type of illicit activities. And I think any technology isn't necessarily inherently good or inherently evil. I think the technology is getting built around Bitcoin is starting to really address some of those concerns and some of those problems. And I also think the U.S. is taking a good light regulation approach. And I think they're regulating at the right points. And I think that is at the exchange level when money can inflow to fiat and back and forth. And I think that makes a lot of sense because I think a lot of the innovation is going to happen up a layer, which is in the actual technology itself. And I'm encouraged to see the way it's been approached by the last two administrations, and I'm hopeful that continues under Biden.
By the way, looking at the mining world, isn't it like in other spaces cheaper to, I don't know, take land in a very cheap part of the world? I don't know, East Europe or I don't know, Africa, and do it there? I mean, do you see that that happening? What's the real benefits of having it done here versus cheaper places in the world?
Yeah, well, North America has the largest, most resilient power grid in the world, bar none. So, in terms of energy assets and just capabilities, the U.S. is number one. Canada is also very strong. I think we'll have operations in Canada by next year. But there is a lot of interest in staying in North America. Lack of geopolitical risk. There's the KYC AML thing we talked about earlier, making sure that they're somewhat vetted coins, if you will. So there certainly is interest in that. But Danny, to your point, it's a worldwide competitive market. There's nobody stops anyone, and I think it's going to continue to do so, which is part of the beauty of this. People are mining in Kazakhstan, Mongolia, Russia. There's some South African sites I'm aware of. We see it everywhere, and nobody controls this thing. Nobody's controlling inflation, deflation. It continues to run, and that's the beauty of it. I mean, it's a large-scale experiment that's running in real time. We're seeing unfolding before our eyes.
For those of us who don't know, how do you hold and liquidate, monetize the digital assets into local currency?
Exchanges are the points of liquidation. So anytime you're going between fiat currency and a cryptocurrency is always done on an exchange. Coinbase is by far and away the market leader in the US. They're just planning on IPO, which I think is going to be a behemoth and is going to be really interesting to watch. I think it's going to add credibility again to what's going on in the crypto and the DeFi sector. Kraken is another one that we watch pretty closely and worked with. Bitstamp, and there's several others. For non-US, Binance is definitely one of the best ones out there. They don't cater to US residents, but once you're on the exchange, you can most of the time either convert from fiat back and forth or between cryptos, which is done for a lot of people when they do the trading to things that are called stablecoins, which are cryptocurrencies that are pegged to the dollar or pegged to another currency.
One last question before I'll start to talk about, read you the questions from the audience here. If family office is interested in getting involved, what are the most popular options? And if you can also talk about the pros and cons of each.
Yeah, again, I'll reiterate, we're a service provider. So as far as the traditional investment vehicles, we're happy to talk through some options, but we work with our customers, which are family offices, hedge funds, private equity, and then again, publicly traded companies. So that's certainly who we cater to, particularly when it starts to look at scale. We do have partnerships with customers that are running fund vehicles, if those are of interest, kind of like what we presented last time with Zero G Group. And then there's other options to get into the market space. So we're going to have some contact information at the end of this. I encourage you to reach out, and we're happy to walk you through the options, even if they're not through us here at Compute North.
So let's start with a couple of questions from the audience here. Do you have exposure to crypto yourselves?
We certainly do. I'm assuming this is at a company level. When we start to look at that, we're obviously there's going to be some exposure in regards to what the coin price is doing due to our customers. However, we don't mine much ourselves. We are really focused on delivering a great service and value to our customers, and we want them to succeed and we want them to win. And we do that again through low cost, moving fast, and being very credible and easy to work with. If we have to, if a customer doesn't pay us, or there's a situation when they default on their lease or on their rental agreement, we can certainly take over their equipment, mine ourselves if we were to get in that type of situation. But it's not our primary business.
How much? Okay, no, that's another question. What's the future of Bitcoin mining with proof of work being replaced by proof of stake based consensus?
Yeah, I think that's a great question. I don't see Bitcoin specifically ever going away from proof of work. It's not going to happen where the miners there's going to be a large enough of them where they're going to change the underlying code and change that mechanism. And I'll get back to my comment earlier about standardization. Bitcoin is the only network with 12 years. It's been secured. There's been no hacks. It's continued to scale. It's continued to grow. And there's certainly technical innovations that are going to be a part of it. But proof of work, I think, is the only one that's really got that type of track record. That being said, I think it will go into much more, greenfield type energy solutions, or areas where you're producing at very low costs. And again, over time, I think we'll see that, marginal profitability decrease to where you got to be extremely efficient, which is why we play that game. That said, I mentioned this earlier, but there's 27 other types of consensus algorithms that I'm aware of. Proof of stake is kind of the number 2 and the plan for Ethereum. And I think it's great because there's going to be all types of innovation in this sector, and people are going to find new ways to do it. And if you can do it without burning a lot of energy, I think that's really compelling as well. There's still going to be an infrastructure need, but maybe not to the same level. But again, I just don't see Bitcoin going away just by the magnitude and the scale and the network effects that it already has.
How much does the user need to know to use your services, given it is tier 0, or it's low code, trying to get an understanding of your typical customer. I think you've talked about a little bit.
Yeah, so our customers are typically looking to get mining exposure, and they have an understanding of the amount of money they want to put to work, or they actually have machines on order and they're ready to go. So it's kind of one of those two. We do all the logistics, all the delivery services, even things like, repair. I mean, there's fans and things that need to continue to get maintained on these machines. So we have a, really soup to nuts type of service offering to deliver that and make sure that they can be as hands-off as they want, or they can be as hands-off as they, if that's something they want to get involved with. So we do have companies that do have technical teams, and we engage with them as well. So it's kind of all over the map. To the tier 0 comment, where we do see our customer base going is any type of compute. We just hired Naili Matai, our chief technology officer, about 8 weeks ago. He was one of the founding executives of Enphase, one of the largest solar companies in the world. And his, real push is helping up work in some of these other verticals, like the machine learning, like the video rendering, the other, non-mission critical, high intensive compute applications. And that will be a different customer base, but it's early innings yet for us in that sector.
Great overview of Bitcoin and blockchain. With Bitcoin being quite largely owned by a few early adopters, do you see a real problem with wealth disparity if cryptos become a standardized currency?
Boy, that's a great question, one I haven't been asked. I think it's going to be really interesting to see how Bitcoin specifically plays out, if it truly becomes a store of value or if it's a currency. I think there's a lot of problems with it being a currency. I think some of the, the scarcity elements, et cetera, involved, and it's not great yet for doing microtransactions. There are some solutions for this. I think Lightning Network is one of the ones that I've seen that is the closest to this, and I think works really well. But I'll say, the problem that I think the U.S. dollar is going to face long term is the credibility gap. But what is the next best alternative? And I don't think that's been answered yet. And I think that's for the next, 5 to 10 years are going to be really interesting. And I think a lot of folks don't want to necessarily operate on the U.S. having its own credit card. And I think that's fundamentally what the reserve currency status is giving it. Bitcoin fixes that. And it's going to be really interesting to see how it plays out. If some of these big markets start to move, it's going to move really quick. And I think it's going to be a real challenging environment for the U.S., but it's going to be fascinating to watch this kind of play out over the next couple of years.
By the way, it looks like, unlike 2018 when there was like, everybody and his mother were after cryptocurrencies and the masses invested in stupid ICOs, as you remember, and all of that, that now it's, the resurgence we've been seeing is probably supported more by more sophisticated players, institutional players, long-term players. So it looks like it's more stable, I guess, in that sense than before when we're seeing the institutionals getting in the game.
Yeah, Denny, obviously the likes of the Black Rocks, the Franklin Templetons, et cetera, all coming into this sector is crazy. And to your point, a lot of them are buying the asset and they're not moving it, right? It simply goes away. Even what Grayscale is doing, Timur at DCG, is that once they take that into their vehicle, it's not moving. So we're seeing more and more scarcity, which makes it more and more of a store of value versus a currency, because there's no movement, right? There's no movement of that cash.
I can also tell you that we have sponsors doing a blockchain event, and now we are like telling the guys, if you want to just pay us by Bitcoin, feel free to do that. And they're like, no, we keep that. We're gonna pay you. Give us.
When you're seeing the value go like that, it's really hard to pay for something when you think in 3 weeks it's going to be worth 20% more.
Yeah.
Yeah.
Do you have any intentions to provide services to networks other than Bitcoin?
Yeah. So to the whole idea of the new category of tier 0 computing, we do anything that is computationally intensive, that requires services like us, but doesn't need 5 nines or 6 nines of uptime. makes a lot of sense for our facilities and our operations. And again, it gets back into how do we partnership with the grid and the energy providers, and that ability to shut down on a moment's notice when they need it is very essential. Now, it doesn't work for a mission critical database. It doesn't work for, you know, Amazon e-commerce, all those types of scenarios, but it works really good for, like, you know, cryptocurrency networks that are doing proof of work consensus algorithms. We do Ethereum, we do Monero, we do Zcash, we do, you know, Bitcoin today, and we can do all those other networks. Some of the other networks, like, you know, that are moving to proof of stake, probably don't have quite as need for us for infrastructure, but things like machine learning, things like rendering, things like just traditional HPC, all require computational horsepower, and we only see that continue to grow in spades over the upcoming decades. And again, we think having that power and energy development bent along with the compute side is the real story that we want to continue to play, and we think makes the real sense long term.
Now, here is one that's interesting. What margins are some of your customers making? And yeah, we're getting down to the bottom line here.
Yeah, that's fair question. This will blow you away, but our customers are over 85% margins right now. Bitcoin is crazy profitable because of the recent run up in pricing. What's interesting about the Bitcoin network is that it's built to, over time, compress that. As more miners come online, everybody receives less and less and less. And that's something that's called the hash rate or the difficulty rate. And that adjusts every 2 weeks to make sure that the allocation of Bitcoin stays at the same rate. We anticipate we're going to see, you know, 40 to 50% increase of the hash rate over this year, and maybe more. And along with that, you can think of that as a direct correlation to the reduction of their profits.
You mentioned power. What about network connection speeds? Any limitations there in selecting a location?
There's certainly some requirements. Happy to share that directly on you know, follow-up conversation, depending on where you need to go. Network is relatively minimal for Bitcoin specifically. Other networks have more or less requirements in order to run well. What's pretty fascinating, though, is what's going on in the LEO space, so the low Earth orbit internet connectivity. Starlink is kind of at the forefront of this right now, where they're putting a constellation of networks in the sky. But different than previous internet satellite networks, they're much lower to Earth, and they communicate directly via lasers. And what that does is it drives out a lot of the latency that's been problematic with the larger scale networks and the larger scale, or I guess the higher, the geosynchronous ones that don't move, that it took a long time, where video would break and phone calls were jabbered, and it just simply didn't work for a lot of applications. So it's early innings with that, but there's 3 big players that are making a big push into this. In the next 3 to 5 years, I think you're going to have high-speed internet anywhere in the world, anytime you want.
That's brilliant. And I'm looking again at your amazing bio here. I'm on your LinkedIn page. Wow. And you actually started working hard and creating businesses in 1994, which means you were like 5 years old.
I got a great dad and a great mom who are entrepreneurs in themselves. My dad founded his first technology business, which was WAN. You had mentioned it earlier, when he was 50 years old. So he took a big leap. He had 4 sons, and he went and did his own thing. And I was fortunate enough to be on the receiving end of that. He brought home some computers, I think, when I was in 8th grade. And we lived in the country, so there weren't enough girls or things to get me in trouble with. And I got a lot of time with the computer and started up a bulletin board. And then subsequently, it turned into an internet provider in, I think, 94. And that's what became ultimately Secure Connect, and was sold in 2013. We got heavy into PCI compliance, but kind of, I'd say, whet my appetite both for the entrepreneurship angle as well as, you know, technology and computers. And it's been a fun ride. I'm fortunate to work with some great people, and it's a fast-moving industry, and we have a lot of fun along the way.
And you, all of you guys are in the Minnesota area. Your entire family, you're all.
We are. In spite of the weather, we stay here. So.
Yeah, that's the part I wanted to understand better, because, you know, I'm here in New York during the winters. I'm like, why am I here? Why am I here? Every time I'm opening the door, I'm like, no, come on.
It's not bad. I always tell people the way you survive a Minnesota winter is a warm garage, which I did use Bitcoin miners for a season, by the way. My wife appreciated that. A remote car starter and a few vacations. You get that out of the way, life is good. So.
Great. So, anything else that you'd like to add at this stage regarding our discussion?
I think we're good. I can put up, I have some contact information. Maybe I can just share on the screen just so people have that if there's any kind of follow-up questions.
Of course, and we will send all the information, including this recorded session, to all of you. So both to those who are here and both to those who attended and couldn't, that registered and couldn't attend. So we will send that contact information to everybody. We don't see the page with your contact information.
They're not popping up. You know what? I'll just put it in the email then with you. So.
Oh, there you are. Yeah, so we will share that with all of you later on.
Okay.
I am looking forward to seeing you in person. We pick very nice locations as well. So if we'll see you in person, it's going to be in Florida during Art Basel or New York in September. So it's going to be fun. And yeah, thank you everybody for being with us here today. Our next session is actually the day after tomorrow, where we talk more about the cannabis world. Actually, not the cannabis world at all. I have no idea what I'm talking about. It's about tissue culture as an important technology in food and pharma for production of disease-free, high-quality, uniform plants. That's going to be a very, very interesting discussion the day after tomorrow. And as you guys know, next month we're meeting in person at the World Trade Center's rooftop with the one and only, the great Larry Silverstein, one of the most respected and successful entrepreneurs in New York history. So I would like, again, to thank you all for being with us here. Any further questions, anything at all, you can direct directly to Dave, which will share the information later on. So thank you again for being with us, and we hopefully will see you soon and in person.
Thank you, Denny.
Thank you so much.